In your presentation, you talked about the greater market volatility and the need for risk management tools as we move forward in agriculture. Can you talk about some of the factors that are in impacting volatility and some of the risks that need to be mitigated?
Yeah, sure. I mean, basically, our outlook suggests that the prospects for agriculture are very good in terms of income, in terms of prices, in terms of growing demand. But for a producer, it's extremely important to have some certainty about the future. And what we've seen over the last few years is a lot of increased price volatility in agriculture. And the question is that going to continue, or are we going to go back to sort of previous periods which are more stable? And there are a number of driving forces which suggest that volatility is going to be around for some years to come. The climate experts tell us that we're likely to experience more extreme weather events, so that affects yields, that affects prices. Macro economy, looking around the world, there's financial meltdowns here and there. Again, that affects markets. You look at the fact that as developing countries increase their income, they buy more products, but they also have a higher inelastic demand for the products, which means the prices have to go up quite a bit before they actually change their demand structures. There's issues around agricultural policies that have been brought into place, ad hoc policies about export restrictions or export bans at a time when there's a price spike, and all these things generate increased volatility. So the driving forces behind volatility would suggest that farmers are looking at more volatility. If that's the case, governments need and farmers need to focus on improving the risk management of their business. Now, obviously, the basic risk management is the responsibility of the producer in terms of diversification, in terms of whatever. But there's some of these driving forces are beyond sort of the farmer's control, and therefore I think governments need to look at certain risk management tools, making these tools available to farmers so that they can manage in the system of less risk than they're faced today, just looking at markets.
Now, you also talked about productivity, and I think the number you use is 1.7%, much lower than in the past. Can you talk about what is driving that productivity lower and what the industry needs to do to move it in the other direction?
Yeah, that's a very complicated subject. What our medium-term forecast suggests is that the annual rate of growth of output for the next 10 years will be lower than the previous. That's not quite the previous 10 years, but that's not quite the same as a measure of productivity. When we look at productivity, which is a more complex measure really, what we're looking at is productivity has been slowing in developing countries. And when we look at the increased demand we're expecting to see for food, for fuel, for feed, and we realize there's not much more land that's going to be brought into production. That means we have to increase productivity if we're going to meet that rising demand.
Are there any sort of silver bullets, maybe not silver bullets, but top of mind suggestions that need to happen to move that productivity in a positive way?
Research and innovation. I mean, any study that looks at the contributions to increased productivity always say that research, innovation, extension is one of the most important factors. Investment in those areas always generates a huge economic benefit. So that's a good place to start.
Thank you for your time today.
Thank you.